Hi guys. Hi Ajay, it's nice to see you here. My apologies, I know that today you can't see me because I think my camera has a problem. I will get it fixed maybe after the webinars. I try to figure it out, but I don't know why it's not working. Okay, my apologies. Nice to see you here. Okay, shall we just wait for 1 minute for everyone to tune in and I will start the session. How are you guys doing so far? Hi everyone. Okay, I will start in 1 minute. Okay, you're good. Okay. All right, happy to hear that. Any one of you guys buy gold today during the Asia session? I think they are waiting for the later today for the CPI. Okay, if you guys buy from the support, okay, while we are waiting, just talking a little bit about gold. Okay, and then I will start the session. Okay, anybody of you guys buy for this is the support level. Okay, you can see that the support level. And today we're going to talk about the SMC, right? Just a quick look on market structures. What do you see that? Oof. Am I correct? Okay. Right. Do you think that they're going to make the higher high from here? Anybody of you guys buy at 3340 today? This is today, price falling and rising. Okay, all right, we'll come back on this again. My apologies, I know that you guys cannot see me. Okay. Don't worry, I'll be here again, guys. If you have any question, all right, just send in, I will get back to you. Okay, actually you can ask me anything about trading, even though it doesn't mean have to related to this today's topic. Okay, if I know, I will answer. If I don't know, I will get back to you in the next webinars. Okay, shall we start? Again, guys, good morning, good afternoon, good evening, wherever you are. Welcome to IC Market webinar. So today's topic, we're going to talk about smart money concept, which is I split into 3 parts. Okay. Okay, sorry. Okay, so I'm split into 3 parts. So today is just about introduction, and then part 2 and part 3 I will explain in depth about SMC and core SMC as well. Okay, and disclaimer first before we start the webinars, guys. Remember that everything in this video is purely educational in nature. Okay, nothing should be considered as investment recommendation. All right, and risk warning over here. Trading forex and CFD carry significant risk to your capital, and you should only trade with money you can afford to lose. Okay. Hi Jamilus, nice to see you here. Okay, and speaker today, my name is Peggy. I'm an investment analyst and a prop trader. Okay, this is an agenda for today. So basically we're going to cover what is smart money concept, SMC versus traditional price action, core principles of SMC, and key SMC terminologies. Okay, so and before I start the smart money, so basically you just forget about price action, forget about support and resistance, so totally just forget about that. Alright, and what is smart money concept? So basically SMC is this. Okay, it's a modern trading methodology that focuses on analyzing and following the movements of institutional investors such as banks, hedge funds, and large financial entities who control significant market capital. These entities, collectively known as smart money, possess deep market knowledge, and through their activity exert a powerful influence on price trends. SMC trading is about identifying their footprints on price charts and aligning retail trades with institutional flow rather than trading against them. And the key idea is that instead of simply reacting to the price pattern, what is our price pattern, such as head and shoulder, M pattern, W pattern? So basically just forget about that. Okay, SMC trader seek to understand prices, why prices move, by observing supply and demand in imbalances created by institutional order, anticipating where this big player might enter or exit by leveraging this to find high probability trades. Okay, and SMC versus traditional price action. Okay, for the aspect analytical focus for traditional past price movement, chart patterns such as support and resistance, candlestick pattern. Okay, for SMC, okay, they are focused on institutional behavior such as order block, liquidity zone, market structures. Traditional approaches is very simple. They observe on price pattern. For the SMC, okay, they approach on deeper, focuses on market psychology and institutional activity. Traditional, they are using tool and indicator. Okay, sometimes they just primarily focus on price alone. For the SMC, okay, they are using order block, fair value gaps, break of structures, volume, and liquidity zones. Interpretation, traditional is very subjective, experience driven. Smart money, more objective evidence of institutional orders. Okay, complexity, which is where am I in here? Where is my mouse? Here. Okay, complexity for the traditional is accessible for beginners. For the smart money, steeper learning curve, but can offer deeper insights. Advantages for the traditional is very simple and split. SMC, high probability of opportunities, deeper understanding of market dynamics. Disadvantages for traditional, risk of false signal, subject to interpretation. Smart money, complexity, potential to overcomplicated trading. Okay, and SMC, okay, incorporate market structures of institutional order flow, which traditional price action often overlook. This allows SMC trader to anticipate large movements that may trap or manipulate retail trader, resulting in more effective position timing and risk management. Okay, so there will be 5 core principles of SMC. Okay, market structure, supply and demand, liquidity target, order block, and fair value gap. Okay, and market structures. Okay, we use market structure to identify trend reversal, or consolidation by studying the frequency of high and low. Okay, higher high, higher low for the uptrend, lower low, lower high for the downtrend. Changes in structures we call break of structures or change of character. Okay, indicate key trading opportunity, which is in the picture over here. I erase first. Okay, you will see that price on uptrend, they make a higher high, higher low, higher high, higher low, higher high. Okay, and this is called break of structure because they break the high, right, and make a new high. Okay, and once they break below the previous low here, so they call change of character, and continue to go lower low, lower high, lower low, lower high, lower low, lower high, lower low, and they make a higher high, higher low, higher high. So this is a change of character. Okay, any question? Right, this is quite straightforward, so you should know already, right? Lower low, lower high, change of character, continue to go at lower low, lower high, and this is called break of structure, break of structure, break of structure here. Okay, the same like the pictures. And supply and demand, okay, they are focuses on zone where institutional order are likely to be placed. The area of high buying we call demand, or selling we call supply. Okay, these zones often lead to significant market move. And liquidity tapped, okay, or liquidity target. For the smart money, they are cheap for liquidity pools, where area where many stop loss orders are clustered, or like placing stop loss. They drive price to this zone to fill large order, triggering stop and creating volatility. Again, for the next webinar, I will explain more on the liquidity, because we have sell side liquidity and buy side liquidity, right? But don't worry about that, I will explain in depth for the next webinars. Okay, for the order block, okay, blocks of the order placed by institutional that act as strong support and resistance level. Identifying this order block helps trader pinpoint probable area for price reversal or continuation. For the order block, we have how many order block? We have bearish order block and we have bullish order block, right? I will show you guys later. And for the FVG or fair value gaps, basically price gap form when strong institutional activity causes imbalances. When price return to this zone, they often provide high probability trade setups. Okay, and now the key SMC terminologies. For the term order block, okay, is the meaning that accumulation of the order by institution forming support or resistance and likely to reverse. Okay, liquidity pool, price zones with high density of stop loss orders, often targeted by smart money for entry and exit. Break of structures or BOS, a clear breach of structural high and low, confirming trend continuation. Okay, change of character, right? This is they say that confirming trend continuation is said like that, right? Because they breach the high. This is a break of structure, that's why for trend continuation. For the change of character, sudden structural reversal, signaling a potential trend change, right? That's why higher high, high low. This is change of character. This is a big break of structures. Okay. FVG or fair value gap is an area of imbalance, often quickly retraced to by price rather after a sharp institutional move. Supply and demand zone regions where buying and selling pressures by institution influences future price movements. In the inducement here, I will explain it in the next webinar. So basically, inducement meaning price action decide to trap retail trader against the intent of smart money. Okay. I know that today a lot of slide to go, but I will try to cover, and next week I'll explain also about this. Okay, so this is all about SMC terminology. Any you guys have any question? If not, let me look at our chart together. Okay, and here, where is the chart? Alright, I'll take XAU UXD for the example. I will take H4 for maybe D1 is not okay. Okay, let me look on the H4 since where it will just to look like this. We know that price on really strong uptrend, right? We would just say that this is our segment. Okay, maybe here we could say this our breakup structures. Okay, this one, oof. And this also breakup structures, right? This also breakup structures. Here. Okay, it will look like that. Seen here. Zoom. Okay, to zoom here. And another one is right here. And another one is here. Right, and what we could see here, seen here, if we want to say, okay, this is our, just move maybe from here, lower low, lower high, lower low, lower high, lower low. Oh, lower low. And what do you think? And this one is our channel character. Right, channel character right here. And one, you can see the channel character because why? You can look at the impulsive move, which is this candle. This candle, right, is a large and long, right? We know that this is already the institutional player in the market, right? The break below this, the previous low, which is right here. And what you could see here, when they break below, okay, how we going to get in this order? They create the FVG, right? Here is our FVG or fabric gap. You want to consider, okay? And it's about 61.8% Fibonacci level as well. Okay, you can see that the break below this level. So when price retraces at least 50 above 61.8, you're gonna sell. Okay, right here. Let's say we go to H1. What you see in H1 time frame. In H1 time frame here, this is a FVG in H4. If you were to zoom in, okay, to H1, you will see this is also another FVG or fair value gap, right? If you want to trade with the FVG or fair value gap, you know that the FVG have to, within or at least 50% and above, and then we're going to sell, right? So now when you're going to see that price go to the FVG and then falling. Okay, this is our FVG in where? Is it? Yep, it is FVG in H1. This is FVG in H1 FVG, and I'll put like in H1 time frame. Okay, and you can see that within the FVG we have really 61.8% and so, and then price is falling. Go back to H4, you mark out, right? And now price easily change up, make a change of character and lower low. Then we continue to go see, right? Then you will see that okay, they make the what is this? Break of structures, right? They continue to make a lower low, lower high. Lower low, lower high, lower. Maybe I don't know whether they're gonna stop here. Lower low, okay, right? And then they continue to go lower. And then this is the break of structures, right? Continue. Now what do you see? You know that they already make the change of character right here. Right? Because in order for them to continue to bearish, to go bearish, they need to make a lower low, lower high, lower low, lower high, right? But instead of they make the higher high, they make the high break below this previous high, right? So now change of character, okay, and then what you see here, what do you see? Where is the high? The high is here. Okay, there was sideways, right? There's a sideways here in H4 time frame. The high is here. Okay, so meaning continue, you mark out. Now the resistance is still falling, or ranging. Retrace again and continue to go break above. So this is your channel character. This one could be your break of structures already, and there will be internal and external. This one we could call external. Okay, external break of structures. Internal within like this one. This one you could say like a internal break of structures, like we call this, for example, right? We say that okay, this one you can see that okay, maybe here lower low, lower high, lower low, lower high, lower low, lower high, right? This one you could call the internal break of structures. Okay, for example here, This is within H4 time frame. Okay, this is we call chain of character. They make the maybe from here lower low, or maybe it should be like chain of character higher high, higher low, higher equal high, a lower low. So basically this is just the internal one. So basically I would say that within this one, okay, before they break above this, the traditional one, we will call this our resistance level, right? We will call this our resistance level, correct, for the traditional. Okay, and then you can see that price was ranging like this one. Before the break above, ranging, I will call this price make a break of structures. This is a break of structures. Okay, but I will call internal break of structures. Okay, is this one? Okay, the high and then the low. This is also internal chain of character. I add in internal and external, right? Internal meaning within the range. Okay, you can see that. And price make a lower low, lower high, lower low, lower high, lower low. Okay, for the external one, the low in H4 is here, correct? This is the low, it's here, and this is the high. Okay, this is external, this is internal, correct? You can see that. And after that, what you see that price also make the from here, right? Lower low, they make a lower low, lower high, equal low, and make a higher high. Want you to go higher. Okay, follow, go to the external. This is our external, which is this our break of structures, right? These are break of structures here, external, and they break above. So this is our break of structures, external one, and you can see that they break above and continue to go higher, right? You can continue to go higher. Boom, boom. And in over here, you also can see that they break above, they continue to go higher. Okay, here, right? Higher high. Can you see? Right, make a higher. Okay, these are our break of structures already seen here, and continue to go higher. And you also can call here, where is that? Here the market break of structures, right? This one seen here, break of structures, BOS. This is another BOS. Just hang on, guys. Mama. Okay, so this is breakup structures. Okay, this is also breakup structures. Okay, you can see that then they continue to go higher. Okay, you just mark out, where am I now? Right here. Okay, I pause here for a while. You guys have any question? No question at all? No question? Okay, just a minute. Okay, no question. Okay, continue. Okay, so this is market structures. Okay, and another one, we are talking about the liquidity, right? So basically, actually I want to explain in the next webinar, but I will show you guys liquidity. We have two types of liquidity. Okay, we have the sell side liquidity. This is okay, this is sell side liquidity over here. This is sell side liquidity over here. I will change to red. Okay. Over here, basically meaning that if you want to sell it over here, right, you will get stop out or stop hunt, right, because of this one. Okay, usually why we call liquidity, because above this one you will have the stop loss for the sell order, and above the stop loss there will be a pending order. Okay, so basically, okay, you can stop out for the sell entry, and then for example like you place the buy stop, okay, over here. Okay, and buy stop order where you're going to place your stop loss, you will put the stop loss somewhere around this zone, right, around this zone for the stop loss, for example. Okay, you sell here, you can stop out. Okay, and after that it trigger your buy stop, right? You can see it trigger your buy stop, make you happy for a while, and after that it's revert and hit your stop loss, right? This is your stop loss for the buy stop. So this is called sell side liquidity. Where's our buy side liquidity? Buy side, so basically here I would say, consider, let's just say you were to buy at this level. Okay, if let's say you buy here, you buy here, and then, and this is not a good example, like those let me have a quick look. Okay, for example, if I were to buy here, if I were to buy at this level, okay, for example we buy at the support level, right, and you will get stop out because of this one, because below this support level, we would identify this our support level for the traditional one, right? Why the price bounce from here? Because below our support level, for the smart money, they will look here for our demand, right? For our demand, you can see the price come to the demand zone and then rising. And if you want to buy from this one, you may get stop out because of this. Okay, because this is another example for the entry. For the stop by like okay, maybe I go to another one. Buy side liquidity, I'm trying to okay to put to stop loss, let's say okay, let's say if we were to buy here, right? Let's say we were to buy here, this one is let's say if price come back here again, for example, and then you identify this and then you put the stop loss somewhere here. This is your buy side liquidity. Okay, it's over here. I will change to green, this green, save as, buy. Okay, so it's called buy side liquidity here, right? Because let's say if I were to buy at this support level here, okay, I will place my stop loss slightly maybe below the wick or at the wick, and then you can see that you will get stop out this zone, right? You will get stop out this level. Stop out for the buy entry, and you put the sell stop here. Okay, trigger your sell stop, and your sell stop here, maybe you put here for your stop loss, right? Trigger your sell stop, make you happy for a while, and then price revert and hit your stop loss for the sell stop. So this is called stop hunt or liquidity, and then price rising continue to go higher. Okay, and where go to your make the break of structures, which is over here, right? This is the low. Okay, and then it go higher. This is liquidity. And what we cover, actually for the FVG, we already know that FVG is just a gap between three consecutive candle, which is the first week of the candle, which is this one, is not touching the third week, which is this one, right? The first one, second one, and the third one. This is called FVG here. And you see here, able to sell an FVG here, price falling. This is H1. It's how many pip? For example, you were to sell here, price falling, it's about like 50 pip, and then rising again. And why price is not respect this FVG or fair value gap? Why? You know why? Let's say you were to sell here, okay, 50 pip, you are happy, you close. The next FVG that I can see is above here. We have another FVG or fair value gap right here. Okay, and within our FVG, we have 78.6%. Let's see. Do you think the price is going to go above this level? So if you want to sell our gold, okay, I think this is the next sell zone for you. You may consider. We have FVG here, okay, and we have within FVG we have 78.6. So the sell zone is about this price. Okay, this kind of is about 30 pip. Okay, this is how it look like. And what you could see here with about the order block, remember our order block, H4 order block, we have bearish order block right here. But we're going to sell order block when it's fresh, right? You can see that within our order block now, this zone already have been used, right? You can see the rejection. So under the block that I can narrow down, which is this level. I will zoom and see. Okay, maybe in this one other block we have FVG in H1, and I'm zoomed to look at the for this one, right, you can see that a lot of rejection. For the traditional, we will sell here, right? Why we sell here? For the traditional, we will look here for the chart pattern, right? This is what M pattern, right? Price pull back to the neckline and then you sell, and price hovering around this level. Okay, this is traditional. We sell at the neckline, right? And price is falling. So if price rising again highly, is likely they're going to break above this rest box here, which is our next sell zone or POI, point of interest, is this zone, which is the rest one, not this level, like not this. Okay, you can see that price, go to the chart pattern, M pattern, next line falling, come back again. Is I don't think they're going to fall from this. So for the POI, point of interest, you wait here 3366 to 3369 or 3370, you may consider to sell. The stop loss you just put above this swing high. Okay, because this is our sell zone already. Okay, so you see that I sell here. Okay, but I close already in the smaller time frame. For the next sell is over here. Okay, at this price. Okay, you look. The first time I sell here, our take profit is at the M15 around this level for the traditional, right? Because why? It's not, there's so billion trader in the world. Not only like not all of them they trade by using smart money. Okay, a lot of us also trading using traditional style, which is I myself. Okay, so basically first time come, I will sell here, I will take TP1, I was here TP2 or somewhere around here, but it seemed like price was ranging already. From here you buy up, you sell, you buy, you sell, you buy. So basically it's just ranging in the smaller time frame, which is M15. Okay, so I'm not gonna sell again right here. I will wait for price to go to our other block, or at least 3366 or 67, and then I'm gonna sell. Maybe I might stretch to like this zone. About 40 pip or 50 pip, then we want to sell. I will keep 78.6. Okay, so this is our FVG plus 78.6% within our bearish at the block in the higher time frame, which is H4. Okay, and now if we were to look at market structures based on M15, what do you see here? If we just want to look for the M15 based on market structures, right? Price make a higher high, higher low, and they already make a change of character at this level. Okay, so we wait for price to pull back. This is another reason that we sell at about above, which is 61.8, and right, and it's a neckline here. Okay, so sell here, but it seems like price might go up all the way to 78.6, and it might fall from here, and we'll target here for TP1. Here, or I go to H4. Where is the H4 support or like high, which is here? They break this pivot high, right? This one, or like this swing, or this level. right? This one, you can see that. So we're gonna sell here. If not, if price break above this high, meaning that they're gonna make a break of structures, which is right, chain of character, a chain of character below, right, lower low and lower high, and this one also the break of structures here, right, this one. So now what we want to see, if the price break above, continue to go higher. If not, you wait for price to sell. Now I'm trading in the internal, okay, not external already. In here we're gonna sell here, okay. What I can see based on H1, if you want to sell here, another demand zone, which is right here for H1 time frame, okay, right here, which is this level, this zone, meaning that somewhere around this pullback or demand, okay. You guys confused? Any one of you guys confused? I pause here for a while, guys. Okay, so this one I will remove. We're not gonna sell at this level, okay. Our POI is up here, okay. Point of interest is up here. Any questions? Let me look at the BTC, okay. Any one of you guys buy or sell BTC? Okay, so the BTC here, this is a break of this is a monthly time frame, right? Break of structures, okay. Break of structures, right? You can see that break of structures here, okay. And we can go see here break of structures, the wick and the wick, okay. Why price is falling from here? That will be another, maybe anatoly, okay. Here's the extension. Can you check EUSD? Okay, sure, right, falling, okay. You can see cannot close above the extension and then falling. Before the break above, it was ranging, right? It was ranging somewhere around this level before the break above, okay. This is gonna be your pullback support, but this will have hidden base somewhere here. If you want to buy, high risk but good to buy at this level for the D1 time frame, okay. It was ranging here before the break above. It was ranging, go all the way and then falling, okay. So this is the BTC, and to buy, this is a good buy for you. EURUSD, okay. For the USD, actually I was like, waiting at this level, even though I was say my first support here, but you look below the support level, this is another order block. Now you need to decide whether you want to buy at the support level, or you want to buy when price fall to your bullish order block. What you're going to consider? So when you see this, okay, for the first support we have 50% fib level. For the bullish order block we have 61.8%. So what we want to see, if you want to buy at either support level or bullish order block over here, okay, you need to wait for price coming down and then you wait for confirmation. Or now, if price falling in the lower time frame, okay, we want to see market structure chip or chain of character. I go to the M15, okay. What I want to see, for example, price falling maybe here, maybe touching here, and if in the lower time frame I saw something like that, I will buy. I wait for price to pull back, I buy. Or if there is no confirmation, price falling, going down, okay, start to have the like that, I'm not gonna buy, meaning that they cannot make a lower low, right? They cannot make a lower low. They make either equal low or like that, and then they break off structures here within our bullish order block, okay, and wait for price to pull back, and then you buy. Of course, in the lower time frame they look like that. For example, let me show you. Okay, let's say we will look for this level. Okay, price approaching our key level. This is a break of structures. If you want to buy at this level, it is safe to buy here. Okay, what we want to see, look at market structure: lower low, lower high, lower low, lower high, lower low, right? This M15, continue, boom, lower low, lower high. Where is their previous high? Mark out, maybe here. Okay, you go low here, okay, lower low, lower high. So break of structures is here. Oh no, not break of structure, sorry, chain of character is here. Okay, and now in this one you can see price is mega equal low, right? We have a chain of character because if they want to continue lower, they should not go, you know, beyond this high. They should go lower low, lower high in the lower time frame, right? And now this is our high. So now price come to where FVG. This is our FVG, fabric gap. You could use Fibonacci from your swing low to the swing high. You can see that 61.8% price rising. So basically this is your confirmation. You already see a chain of character here, price falling, okay, to the FVG, or sometimes they might have like a demand zone here, plus another like Fibonacci level, okay, and then you buy here. First buy here, second buy would be slightly below here because here also have another order block, just a few pips below. Okay, so you can see that you can buy up, right? You buy and then you go to high time frame, which is H1. What do you see in H1? Also closing with Boolean gap, really strong buy right here, and it just keep rising, right? Boom. You could target where based on H1. your supply zone, which is right here. This is your supply zone, right? And you can see the one, the supply zone, you can see the rejection, you can see the price action. Above here, some people are gonna sell here. The next sell zone, I'm looking what this level. Boom, there's a gap down, right? There's a gap down. Boom. This one I may get stop out. Price go to another POI right there. You not respect here because there's gap. You sell here because supply zone gap down TP. Then you buy up again, and then if I were to put a pending order here, I may get stop out, right? Because of this other block. Here's the block. Price did not respect this. They go to above this level. Okay, and then falling. That might be a H4 time frame, which is they go to higher time frame supply. This is the supply. Okay, any question? Okay, now you ask for the EU. Okay, so let me just give you 2 for support. Slightly below here, I already mentioned we have other block at this level. Okay, so basically they're gonna have a 2 buy zone. Just wait for confirmation of market structure shift on the lower time frame, and then you buy. Okay, around this level. So basically I'm still waiting for the EU to fall slightly lower. You can put notification, or you can wait for price. If you are sitting in front of the computer, you can wait for price to falling and wait for the low. You wait in the low time frame and you buy up both level. Okay, this is the zone if you want to buy. Any zone beside the EU, EURUSD, GBP. Anybody trade GBP? Okay, basically what I was waiting, I'm waiting for the price to come in this zone. Okay, I'm gonna buy here just slightly, but haven't yet. So I was kind of waiting around at this price. I'm gonna buy somewhere around this zone. We have a bullish at the block here, so like around this level. Okay, so in the lower time frame, what we want to see, we want to see price. You want to look at market structures, right? In the lower time frame, what do you see in M15? Maybe from here. We just started from here. Like you can see, like if you can't see, just make it smaller. Maybe I just put like from here. Okay, lower low, lower high, lower low, lower high. Maybe lower low, lower high, lower low here. So basically, they what you can see that the previous high is here, right? They would make a market structure shift. That's why price is not rising. Our zone is below. What I want to see, or maybe from here lower low. Okay, go to this level, or maybe here or somewhere here. I don't know, when within the zone. I want to see, like, continue higher. Okay, so this is the low, right? And what you could see here, they haven't make a market structure shift, they still make up break up structures, right? This is a break up structures. Okay, break up structures here. this is also break of structures. Okay, so basically like they make a lower low, lower high. So now they're going to go to this level, okay, this level, and then we're gonna sell. Okay, so basically I'm gonna buy somewhere at this level. Okay, okay, so we are waiting to buy at this level, guys. Here the price. All right, any question? Okay, last pair before I end the webinars, guys. Okay, last pair. Anyone want to request? No one? EU gold, we are still waiting. Maybe from here you might falling, I don't know. Okay, I'm still waiting right there. The EUISD, this is the buy zone. Okay, the buy zone is here. GBP as well, still falling. Look at dollars, dollar is rising. Aussie dollars. Okay, last one, Aussie dollars here. Aussie dollar prices, you know, go up from our overlap support level, and they create the other block right here. Put the other block. This is potential first resistance level. What we could see here, above here I can see there is some FVG, but if you follow my like trading, you know that I don't trade with the FVG or fabric gap. I don't trade, okay, unless my FVG you know, line up with any key level or Fibonacci. Okay, that's a bit too far, but let's see. I will use another strategy. If you have a buy entry from here, if you buy who is that, a J, you just hold. Okay, your take profit, I will tell you, that will be as the extension, basically here. This is gonna be your take profit if you were to buy. Okay, if you have the buy entry, you hold, your target is here, which is at your first resistance level. Okay, I don't have a sell entry unless you want to sell at your first resistance. That is your sell entry. Okay, USD CHF, you see that? Still in the bullish channel. With H1, this is my to be buy entry, or this is to be first support. Okay, first support here, Okay, if you want to sell now, wait for the sell entry at this level. Okay, you wait to sell at this level, extension 161.8. So that's your sell entry for the USD Okay, alright guys, that should be all for today guys. Thank you so much for joining my webinars. So in next Tuesday gonna be SMC part 2. Okay, I will explain in depth about like SMC like 5 of them. I will explain more about like liquidity, TAF, buy side, sell side liquidity, and inducement as well, and how to enter our trade in the lower time frame. Okay, alright guys, thank you so much for joining. I hope to see you again next week. Happy trading guys. Bye for now. Take care.